Imagine you have a tiny digital seed. It doesn't look like much at first. It just sits there in your hand or in an app on your phone. You might be tempted to ignore it, to spend your time and energy on instant gratification, like a new pair of sneakers or the latest video game. It's easy to overlook something so small that promises future growth, but offers nothing tangible now. This little seed is your first investment. It could be a few dollars or the cost of a couple of fancy coffees, but that seed can grow into a massive money tree. This isn't a fairy tale, it's investing. You plant a small amount of money in the right soil. The soil, stock market, ETFs, or cryptocurrency. Like a real plant, it needs time and the right conditions. You can't expect a tree by morning. It requires patience. Resist digging it up every 5 minutes. Plant it. Add a little over time. Water it. Then let it do its thing. Slow at first, but compounding is the magic. Think of it like leveling up in a video game. Level 1, you're weak. Only small enemies, tiny rewards. It feels like a grind. Each small win gives XP. XP accumulates and you level up. Now you can tackle bigger challenges and get bigger rewards. Investing works the same. Your dollars are your level 1 character. Returns are XP that earn returns. Nobody teaches it that way. School teaches the Pythagorean theorem, but not portfolio diversification. Get a good job, save money. Then the lesson stops. Saving is like keeping seeds in a pouch, safe but not growing. They sit there losing value to inflation, a tiny pest nibbling away. Investing is taking those seeds out and planting them. It's the active step toward lasting wealth for your future self. So, what are the first steps? A golden rule is diversification. Don't just plant one seed in one pot. Spreading your investments helps protect you from unexpected market storms. So why the rush? You're young. You have your whole life ahead of you. It feels like you have all the time in the world to worry about boring adult stuff like investing. Right now, there are concerts to go to, brunches to enjoy, and life to be lived. But here's the secret ingredient that makes investing so powerful for someone your age. Time. Let's use an analogy. Imagine you and your friend are both trying to build a giant snowball. You start at the top of a very long hill on a snowy day. You pack a small snowball, maybe just the size of your fist, and give it a little push. Your friend, who decides to wait a few years, will start further down the hill. To build a snowball as big as yours, they'll have to start with a much larger one and push it much harder. This is the magic of compound interest. $1 you invest in your early 20s has decades to roll down that hill. Time does the heavy lifting for you. We're going to demystify the world of investing. Forget the confusing jargon and the intimidating charts you see in movies. We'll break down the basics of the most popular starting points for Gen Z stocks, crypto, and ETFs. Let's start with stocks. Buying a stock means you are buying a tiny, tiny piece of a company. Think about the brands you interact with every single day. You can own a piece of them. Now let's venture into a newer, more chaotic, and electrifying part of the investment world. Cryptocurrency. Unlike dollars, most cryptocurrencies are decentralized. They operate on a technology called blockchain. Finally, the ETF. It's like creating the perfect playlist or mixtape for your money without having to pick every single song yourself. You buy one thing, the ETF, and you get exposure to a whole collection of assets. It's a way to diversify your investment immediately. Think of this like choosing your character in a fighting game. The right choice depends on your personal strategy. Individual stocks. This is like choosing a specialized fighter, a glass cannon. The potential for reward is huge. However, the risk is also highly concentrated. Next up is crypto, our wildcard character. The potential for reward is, at least in theory, the highest, but the risk is off the charts. Finally, we have ETFs, the balanced all-around fighter. The potential reward might not be as explosive, but the risk is significantly lower. Thinking about your goals in terms of a short-term sprint versus a long-term marathon can help you decide which investment vehicle is right for the job. Let's talk about short-term goals. Saving for a down payment on a house in 5 years. For these kinds of goals, high-risk assets like individual stocks, and especially crypto, are generally a poor fit. Now let's consider the long-term marathon, retirement. You can afford to take on more risk because you have decades for your investments to recover from any market downturns. The most effective strategy is to build a starter pack portfolio. For the vast majority of new investors, the core of your portfolio should be a broad market ETF. Once your foundation is set, allocate a smaller portion, say 10 to 15%, to individual stocks. Finally, for those with a high tolerance for risk, you might consider allocating a very small slice to the wild card, crypto, no more than 1 to 5%. By building a portfolio with this layered mix and match approach, you create a balanced strategy that is both sensible and allows for some excitement. Remember, this is your financial journey. To keep you on the right track, here are 2 final takeaways. First, avoid emotional investing. Markets go up and down. Making rash decisions based on fear or hype is a recipe for disaster. Stick to your plan. Second, consistency is your superpower. Regularly investing small amounts, a strategy called dollar cost averaging, is more powerful than trying to perfectly time the market. It's about time the market, not the market. This disciplined approach will serve you well as you build your future. All right, theory time is over. Now it's time for the most important part, taking action. Step 1, choose your mission control. A brokerage. Look for low fees, a user-friendly app, and fractional shares. Step 2 is actually opening the account. It's all done online and usually takes less than 10 minutes. The final step is connecting your funding source. You'll simply link your checking account. You've built the rocket, now it's time to prepare for liftoff. Now comes the moment of truth, making your very first investment. The biggest mistake? Analysis paralysis. Your first mission? Keep it simple. Just buy $50 of an S&P 500 ETF right now. The moment she clicked buy, everything changed. No longer a spectator, an investor. Psychological barrier broken. The real magic comes from consistency. We need to put your investment plan on autopilot. You tell it. Every Friday, transfer $25 from my bank account and automatically buy $25 worth of that S&P 500 ETF. This strategy is called dollar cost averaging. It removes the stress of trying to buy the dip. You just set it and forget it. This is how you build real, sustainable wealth. A final tip: avoid chasing hot stocks or trying to time the market. True financial success comes from consistent, disciplined investing over time, not from risky short-term gambles. Think about your future self, 10, 20, or even 50 years from now. That person is a direct result of the decisions you make today. By investing a small portion of your money today, you are sending a gift forward in time. It's the path to buying a home, to traveling the world, to quitting a job you hate, to having a comfortable retirement where you are in control. The only thing standing between you and becoming an investor is a few taps on a screen. So, here's my challenge. As soon as this video ends, take that first step. Don't put it off until tomorrow. Do it right now. You have a superpower older generations would kill for: time. Don't waste it. Invest in your future self. They're counting on you. Thanks so much for watching. Subscribe for more content just like this, and I will see you in the next video.